Hello, everyone. Welcome to Money Minutes. This is your host. I'm Zak Gardezy. I'm the founder of Wealthstone, a private wealth management firm based out of Scottsdale, Arizona. I'm also a certified financial planner and a private wealth advisor. So here on Money Minutes, I share with you some of the latest market headlines and my outlook for what's ahead. So for this week's episode, I'll be covering the new Stargate Project and what this means for artificial intelligence, as well as the upcoming Federal Reserve meeting and the upcoming Apple earnings report. So let's get right into it. So we've discussed artificial intelligence a lot on Money Minutes, and for Wealthstone clients, it remains a key area that we're invested in across portfolios. Now, the recent announcement by the Trump administration of the Stargate Project is significant. So this is a huge investment being committed to by OpenAI, who are the makers of ChatGPT, Oracle, Softbank, and MGX, which is an investment firm out of the UAE. They have committed up to $500 billion over the next 4 years, and it's mainly centered around developing artificial intelligence infrastructure. Now, think of, for example, data centers, which will be a key area of investment, and the construction is expected to start in Texas. Now, the overall project itself is estimated to create over 100,000 new jobs across the United States. In addition to that, the initial investment appears to be $100 billion, of course, with the potential to reach $500 billion by 2029. And in addition to building data centers and developing AI infrastructure, the Stargate Project will collaborate with ARM, Microsoft, and NVIDIA so that they could provide their technological expertise to the project as well. And Massa, who is the CEO of Softbank, he will serve as the chairman of the Stargate Project. So what does this all mean for artificial intelligence? Well, a couple of things. Number one, it provides some validation to the theory that we're, I think, nowhere near the end of this artificial intelligence run. If anything, we're at the very early innings of what I believe is going to be continued development of this new technology. In addition to that, it shows that the new administration has a focus on artificial intelligence, which not only backed by the Stargate Project, but also the president's comments at the World Economic Forum in Davos, where he said basically the United States is going to be a leader in artificial intelligence and crypto as well. And so overall, for AI investors and for Wealthstone clients, this is welcome news because it shows us that the areas that we have major exposure to are going to continue to get major investments, not only from the private sector, but now from the federal government as well. So big week for the Federal Reserve coming up. So on January the 29th, the Federal Reserve Chairman, Jerome Powell, will come out and talk about what the Fed's decision has been for monetary policy in January. Now, the overwhelming expectation is that the Fed will keep rates where they're at, which means no cut. Now, we all have a pretty strong feeling that the Federal Reserve isn't going to cut interest rates. It's not really a surprise at this point. We've had multiple hotter than expected labor market reports, which are quite inflationary. In addition to that, we heard in December, as I've talked about in previous Money Minutes episodes, just overall where the Fed's mindset is in terms of cutting interest rates. What I'm paying very close attention to is really the release of these two hotter than expected labor market reports in January. And does this change the Fed's calculus? Are they going to be even more conservative than they were in December? Or could the Fed potentially come out and surprise the markets and be a bit more positive? Now, combining the very low expectation of a cut, in addition to some of these hotter than expected reports, I have a feeling, in my opinion, that the Federal Reserve will come out and be a bit negative and, talk about how the progress with inflation has stalled, and that maybe even the Federal Reserve is taking a very close look at some of the new administration's policies and how they may impact inflation as well. So overall, I believe it'll be a very big week for the Federal Reserve as they have, of course, their first meeting of the year and really set the tone for at least the next few months. And so we'll be paying very close attention to this upcoming meeting, and we'll make sure to keep investors updated on next week's Money Minutes. So big week coming up for Apple. On January the 30th, Apple is reporting earnings. And it's going to also be a big day for the overall market because Apple makes up about 6.5% of the S&P 500. And so the effects of the earnings report will really be felt across the market. And so Apple has had a bit of a rough start, to say the least, to start the year. And quite frankly, it has a lot to do with very company specific factors. The most recent news from Apple is that their China sales are down for iPhone specifically. Actually, Huawei has taken the top spot for smartphone sales, and Apple's not even in second place, or actually in third place at this point. And so, with the upcoming earnings report, there will be a lot of investors paying attention to what Apple CEO Tim Cook has to say about the developments in China. In addition to that, what's the company's overall outlook moving forward? Has Tim Cook talked about the impacts of tariffs with the president, and what is his opinion on this potential threat? And in addition to that, what is Apple doing to prepare for this potential impact, which is a major threat to their company? And so I believe that Apple, as being one of the largest companies in the world still, will figure out a way to get back on top because China remains a key part of their revenue. And so I'll be paying very close attention to next week's earnings report for Apple, as I will be to the Federal Reserve report talked about earlier. So this concludes this week's episode of Money Minutes. Thank you so much for tuning in, and I look forward to seeing you all again next week. Thank you.